All right, let's get straight into it. We're about to break down what might be the single most important price level in crypto right now. This one number could literally define the next big move for the entire market.
So, let's just cut through all the noise, right? All the predictions, the crazy volatility. What is the one number that you actually need to be watching? The one number that could hold the key to where we go next?
And here it is, $104,000. No, seriously. For the next few minutes, this is pretty much the only number you need to care about. It's the pivot point. It's the foundation. It is the absolute line in the sand. And we're going to show you exactly why. Okay, so let's dive in. To really get why this one number is so important, we have to look at where the market is right now. And honestly, Bitcoin is at a major crossroads. The whole market is kind of holding its breath.
So after that pretty sharp sell-off we just saw, the price has been pushed right down to what is, you could argue, its most important structural support. This isn't just another little dip, this is the first real test of this bull run's foundation. And what happens right here, over the next few days, well, it could set the tone for months to come.
Now, you might be thinking, why 104 grand? Did we just pull that number out of a hat? Absolutely not. It's based on something really powerful called multi-timeframe convergence. Basically, when we zoom way out and look at the weekly chart, then zoom into the daily, and then look at the short-term 4-hour chart, they all point to this exact same price as the make or break point. When that happens, you have to pay attention. It's a huge signal.
So let's really get into the nitty-gritty of this thing. The $104,000 macro pivot. Why is this line so powerful? Well, it all boils down to a classic, and I mean classic, technical principle.
And that principle is resistance turns support. It's one of the most reliable ideas in trading. It's simple, really. A price level that used to be a tough ceiling, one the market just couldn't break above. Once it's finally broken, it tends to become a new floor. Think of it like breaking through a ceiling into a new level of a building. That old ceiling is now the floor you're standing on. And this is a textbook example of what happened at 104,000. If you look at the weekly chart, it was a stubborn ceiling for weeks. The moment the price smashed through it, that was basically the starting gun for this whole bull phase. And now, here we are, back down and testing it aggressively. The entire structure of this uptrend is literally balancing on this one line.
But here's the super important detail. A quick dip below the line, that doesn't really mean the end of the world. The market does that all the time to shake people out. What we're really watching for, the actual signal, is the candle close. Where does the price finish when that 4-hour or daily timer runs out?
And here's why that's so critical. A solid close below that line is what validates the breakdown. It's the market saying, yep, the sellers are in control now. And that would almost certainly trigger a wave of automated sell orders, stop losses, that traders have placed right below this key level. And that can cause a domino effect, pushing the price down even faster.
So what this all means is that we are at a crystal clear fork in the road. There are really only two main paths from here, and if you understand both, you'll be ready for whatever comes next. We'll call them Path A, the bullish reversal, and Path B, the bearish breakdown.
Okay, let's talk about the good stuff first, the optimistic scenario. What does the path back to new all-time highs even look like from here? What are the bulls desperately waiting to see?
The condition is super specific. What we need to see is a strong bounce right off this $104,000 level. And it has to be on high volume. You'd want to see price dip down and then buyers rush in aggressively to defend that line, leaving a long wick at the bottom of the candle. That's the signal that the bulls are still in charge.
So if we get that bounce, think of it like a 3-step journey back up. The first checkpoint is reclaiming $11,200. That stops the bleeding. Step 2 is clearing $121,500. A solid close above that confirms the correction is over. And from there, the path really opens up, with the next big psychological target sitting up around $150,000.
Okay, but we have to be realists, right? We have to look at the other side of the coin. What happens if that foundation cracks? This is the bearish scenario, and it's absolutely crucial to know the potential path downwards.
And just like the bull case, the trigger for the bears is crystal clear. It's a convincing daily candle close below $104,000. There's no gray area here. If sellers can push the price down and keep it there when the trading day ends, that is a major, major red flag.
If we get that confirmed breakdown, the first potential safety net we're watching for is around 89.5. If that doesn't hold, the next really critical level is way down at 77,000. That 77K level is a big one, and a test there would be a huge moment of truth for this entire market.
And this is where things could get really serious. A sustained break below $77,000 would be extremely concerning. It would basically invalidate the entire bull market structure we're in now, and could mean we're heading into a much longer and, frankly, more painful period of going sideways or even down.
Okay, we've laid out both paths, the bull case, the bear case. So what do you do with this? Well, this isn't about trying to predict the future with a crystal ball. It's about giving you a clear decision-making framework, a simple if this, then that guide for whatever happens next.
And look, this table just sums it all up perfectly. If you're bullish, the condition is a confirmed hold of 104, then a reclaim of 112, with the next target being over 121.5. On the flip side, if you're bearish, the condition is that decisive daily close below 104 with the first target at 89.5. It's really that clean.
So I really want to drive this point home. We're not telling you what's going to happen. Nobody can. We're giving you a framework so you can react intelligently to what does happen. It takes all the market chaos and boils it down to a simple binary decision, all centered on one powerful number.
So there you have it. The battle lines are drawn at $104,000. Bulls and bears are in a tug of war right at this exact spot. The only question now is, which side is going to win?